Good morning, everyone, and welcome to the Axis Securities Morning Podcast. Today is Tuesday, 31st December, and the time is 7:15 a.m. US equities fell for the third straight day, dragged by a slump in tech stocks. The S&P 500 fell 1.1%, the Nasdaq 100 dropped 1.3%, and the Dow fell 1%. As we roll into 2025, none of the 19 strategists tracked by Bloomberg are expecting the S&P 500 to decline next year, but some market observers are getting concerned about narrowing breadth in the near term. Talking movers, the US 10-year Treasury yield fell nearly 9 basis points as it traced back-to-back bearish engulfing candles, which is very rare. The dollar index rose slightly. Bitcoin fell for the fourth day in 5. Gold dropped below $2,600. And oil advanced to its highest since early November on hedge funds boosting their bullish bets to a one-year high. Coming home, the rupee was little changed following the Friday slump. Yesterday's candle traced an inside bar formation, which represents volatility contraction. That said, 1 month implied volatility on the currency soared to over 4%, which was the highest in 16 months. Traders are of the view that the volatility spike may be the result of the RBI changing its rupee intervention strategy. Coming to stocks, in the Nifty flipped between gains and losses several times until noon, before seeing a steep cut to close out the session. The index ended 0.7% down and the India VIX rose 0.74 points. 9 of the 12 main NSE sectors finished down, with media the worst performer on the day, falling 1.9% and pharma finishing 1% higher. Breadth was negatively skewed as one Nifty stock rose for every 4 that fell. Adani Enterprises was the biggest gainer as it rose 7.6% on news that a commercial flight test was conducted at its new Navi Mumbai airport on Sunday, while Hindalco slipped for the second straight day, finishing 2.6% down. Talking technicals, the 23,880, 24,070 zone arrested the day's advance yet again. This hurdle area will continue to matter on the upside, while support lies between 23,530 and 23,590. We continue to believe that a daily close about 24,150 is needed for bulls to come back into the game. Speaking flows, foreigners invested roughly 370 crores on Friday as per CDSL data. On a month-to-date basis, the inflow number stands near 18,400 crores. Speaking derivatives, the Nifty's put-call ratio went from 1.11 to 0.98, while that of the Bank Nifty's fell to 0.97 from 1.06. 7 lakh contracts of Nifty calls and 3 lakh contracts of Nifty puts were added, while implied volatility rose 120 basis points, which means on a net basis, market participants are expecting a recovery. The FII index futures long-short ratio fell further to 0.17 from 0.21 as their negative stance continued. Looking at options concentration for the weekly contract that expires on the 2nd of Jan, the trackable range remains 23,500 to 24,000, but put liquidation at 23,500 was significant, which means that some market participants are not very confident of 23,500 holding. Meanwhile, implied volatility for near out-of-the-money calls set to expire on 2nd January rose more than that for similar distance out-of-the-money puts, which means options traders are expecting that a weak opening is likely to be bought into. Looking at sentiment via net activity in index calls and puts, foreigners and retail traders are bullish while prop traders are aggressively bearish. Speaking of index futures, foreigners are bearish while prop and retail traders are hopeful of a bounce. Looking ahead, the GIFT Nifty was down 135 points. Asian equities were mostly flat to down. Talking stocks, HBL Power, EID, Parry and Inox Wind were at horizontal support, while Nestle, Punjab National Bank and Network 18 were at horizontal resistance. Delivery, HDFC, AMC and NHPC were at trendline support, while Adani Power, Happiest Minds and IndusInd Bank were at trendline resistance. Talking key moving averages, 36%, 32% and 60% of stocks were above their respective 50, 100 and 200-day moving averages. Fiscal deficit numbers are due from India today. That's a wrap on the day's podcast. Have a nice Tuesday and we'll talk to you in the new year. Goodbye.